All right, today we are talking about due diligence. We're back for another one of our regular talking with Lindsay, listening in on the conversations that I have with friends and professional peers. Today we have Lori Cecil Benani, and we wanted to talk about due diligence. Could you introduce yourself real quick?
I am Lori Cecil Benani. I am the founder of ELSIS, which is a multidisciplined communications consultancy.
Nice. Cool. Awesome. So, Lori, you reached out to me, said you wanted to talk about due diligence. I sent you this link to can we have this conversation on video and share the intel with my YouTube audience and wherever else I feel like posting this content. So, tell me what motivated you to set up the call. What was going on that you were like, I need to talk to Lindsay about due diligence?
So I am a YouTube subscriber and I think you have fabulous content. And while listening to one of the episodes, due diligence had come up and my interest was piqued. And so I started looking for more content around due diligence on your YouTube channel. And I then started Googling and I was like, no, let me just go right to the source. Let me ask Lindsay. And one of the things I find interesting about it is that I work with startups and I'd love to learn more about this process. One of the things I love doing is research and going down like a bunch of rabbit holes and asking the hard questions. So I was like, is due diligence something that I should learn about and see if I add that to an offering once, figure out what that looks like. And I know
Cool.
that you do due diligence.
I
So.
I I do due diligence. Due diligence. It probably benefits you and everyone else if I put some context into what due diligence is and where it sits within the investment process. So today we're specifically talking in my expertise is in angel investing and venture capital due diligence. That term is used in a lot of other places as well, considering like mergers and acquisitions and such. In the world of investing, startup investing, the beginning of the timeline starts with an investor and a startup connecting, right? The founder connecting. And maybe there's some initial pitch, elevator pitch or so. Then there's a phase of screening. In angel investment groups, that's having them come in to do a pitch for their monthly meeting, maybe coming into a venture capitalist office, doing a 10 to 30-minute pitch, maybe longer. There's a committee of people to ask you questions. That's the initial screening. So usually when they first meet in that first meeting, the investor says, does this startup profile fit my investment tastes, also known as investment thesis? I describe it to people as investors are people, people are subjective, people have different taste buds and like different cuisines. That's what investment thesis is. It's all different, right? Depending on the investors. They decide you at least fit their investment thesis. They bring you in for screening. They're like, do we like this entrepreneur? Do we think that this market is big enough to be $100 million business, venture backed 10x our returns? Once they are serious and they think the answer is yes to all of those, then they go into due diligence. So due diligence looks different across a lot of different investors. Individual investors might do like a 1 week deep dive on an entrepreneur's financials, and that could be just enough. One of the companies or organizations that I perform due diligence for, it's a 4 to 5 week period where we interview the founders, the executive members on the team. We talk to other investors, existing customers, potential customers, strategic advisors, their legal representation. We talk to a lot of people to validate everything that the startup has said about themselves, because startups tend to speak a little in hyperbole. We are the first ever in the market kind of thing. And we're like, okay, are these things actually true? A lot of times startups will say that they're using AI and machine learning, but the existing product is just using simple algorithms and they haven't hired an AI engineer yet. So we want to like figure out what like separate the fact and fiction. So that's what due diligence looks like at Ben Franklin and Technology Partners, which is an economic development group in Pennsylvania. There are 5 Bens, and it's a really heavy due diligence period. For another investment group that I perform due diligence for, Chloe Capital, which is out of New York, women-led investment group, invest in teams with at least 50% women founders. It's a little different. They still have, an application, they meet and greet, right? They have some screening, whether it's a quick phone call with the entrepreneurs and a flip through their pitch deck. Then they narrow it down to the top 10 to 15. And that's when they bring in a team of reviewers for which I just review the technology and I write up like a 1-page. This is my impressions of the sophistication of this technology and the product roadmap, and whether I think that what they say is possible going forward. So it's a lot lighter, and they only want me to look at one thing. So that is what due diligence is. And usually after due diligence, the deal sponsor, the investor, whoever is leading this within their organization, makes a decision as to whether they want to invest or not. And again, depending on the group, it looks different. Angel groups, those are individual investors, high net worth individuals investing their own capital. So usually the due diligence team comes back and say like, hey, I'm going to put 25 of my own money in here. I'd love to get some other angels so we can have a pool of 250 grand for this entrepreneur. And it's a matter of working within the angel group to find other angels and how much money that they bring together. Venture funds like Chloe, venture funds, the way Ben Franklin runs is like they have a certain amount of money to allocate towards investing each quarter or period. And so it's a negotiation of comparing the different startups and deciding which one to move forward with. Okay, so that's due diligence.
Perfect.
Got it?
And so I didn't even realize that I was part of the pre-due diligence purpose. I used to sit, I called it mini Shark Tank meetings, when a startup would come and pitch to almost like Ben Franklin Partners, but in New York. And it's Excel Partners, which I think you are familiar with. And we would listen to the pitches, and then they would go and have the analysts do the due diligence if they were interested afterwards.
So you were part of screening. That's what we usually call screening.
I didn't even know. Okay.
Yeah. So you were part of screening. And yes, Ben Franklin does something similar. They have an external review committee of people in the community that are in those screening meetings to say, move forward, don't move forward.
Yeah, exactly.
Right. I usually try to tell people, if you've ever bought a house and you've had to supply all of your financial information, if you have credit card debt, if you have school loan debt, auto loans, all this stuff, and it feels very personal. It feels really scary. Like, how much are they going to approve you for? Blah, 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 blah. That's probably the closest I can compare due diligence to. It's so intense that, are you in Dreamers and Doers?
Yes.
Love that group. It's so intense that I actually was assigned a project to review a Dreamers and Doers founded startup for Ben Franklin. And I reached out to the founder and just wanted to make sure she was comfortable with me doing that. We're going to have a relationship now. And I want to make sure you're okay with that relationship, because basically you're going to see up your skirt and that's you want to make sure you feel comfortable. Thankfully she did. We had a great time. I think we both benefited from having that experience together.
That's funny. Yeah, I think that's interesting, because it is, right? All of it is, the whole process. So in terms of like you said, there's different parts. So you have done the technology, so what are the pieces when they break it up? What are those? Like there's a financial, there's a technology component.
Yeah. And again, I'm going to say this for mostly the audience, not you, I'm sure you get this, is that investors are people, people are subjective. That means they all do things differently. So there's not like a standard, this is how it's done. I know founders are really, really eager to be like, you shouldn't bother raising a pre-seed if your valuation or if you're not raising more than 500,000. Like they make up rules like that to gatekeep, and that's just not the case. So I'll tell you how I look at it. Um, or let's back up for the quick answer to your question. Usually it's kind of marketing, market research, kind of customer segmentation is one piece, industry. Then technology, and financials, plus kind of like some extra interviews that are doing kind of looking at the whole overview. But when I'm doing the more intense due diligence, what I'm really looking for, I'm, obsessed with product market fit. So I'm really looking at like what the product is and whether there's really a market for it, what the customers are saying about it. I'm also trying to pay attention to the dynamics of the team and the entrepreneurs, because just there's so much drama at early stage startups, and really the team can make it or break it. Um, but there's one thing that I've learned over the years. So I've done almost 30 deep dives into startups, and then let's say another 40 to 50 that are kind of smaller due diligence, just looking at the technology. When I'm doing a deep dive, we're looking for story. And now I'm not talking about like your storytelling in the pitch. That's important. That opens the door. But if you look at, for example, a financial pro forma, the projections for the next 12 to 24 months, in those cells is a story, your hiring plan, your marketing outcomes. So we're going to spend this much on advertising, so we expect this rate back, whether that's a conservative estimate or a realistic estimate is based on how mature your business is. So I want to see like the hiring plan kind of spelled out over the months in your operational expenses. I want to see your customer pipeline, what you shared with me, and when those contracts get signed, spelled out in your revenue projections. So that if you tell me with this round of funding, we're hiring this business development guy, and we think it'll take him 1 month to ramp up. So we'll hire him in February. You'll see his salary in February. You probably won't start to see deals close until April or May. So your hiring plan, your customer pipeline, your marketing and advertising budget, it should all be in that financial plan. Now, for me, I prefer to understand all those things and then look at the financial plan. But, we're talking about investors that are, analysts, mathematicians by the way their brains work. So a lot of them maybe won't articulate it the way I just articulated it. But the only thing they do is go straight into the financial projections and start messing with an entrepreneur's spreadsheet and their assumptions and see what happens if they don't get the funding or this contract doesn't get signed, and like model all these different scenarios. They want to see like, is the startup raising enough money to get to the next milestone, which would allow them to raise the next round of funding?
Awesome. That is so super helpful.
Yeah, it took, thank you. It took a bit. And I'll be honest, like, we always talk about women like not taking jobs that they don't feel ready
Yes.
to 100% ready for. My first due diligence project, I got a phone call from the investor, and the investor was like, hey, I think you have fintech experience. You worked for American Express for 8 months. We have this fintech startup. Can you perform due diligence on it? Mind you, like I spent 8 months at American Express running their usability testing lab. So if you want to call that fintech, sure. But it's like, it's not the same as like, I don't know, business loan servicing or whatever this was about. Um, and I had never read a cap table, a capitalization table. I had never read a pro forma or projections. I didn't like understanding all the calculations, and like pro formas come in all different shapes and sizes. So there's always a uphill learning curve with each entrepreneur's like spreadsheet. But yeah, I jumped into that and it was like, I was so nervous handing in that first version. And the funny thing is I did get dinged on that first version. I got called out, not for anything I wrote, but because I didn't use their like Microsoft template. Like I made up my own headers and subheaders and stuff like that.
The information was there that you needed to give them, right? Like,
yeah, so I had to go back and edit. That was my big goof on the first project. So I think there was another question that you had, which was like, should I do it? Should I offer it? How could I do that? Tell me more about
well, it's interesting because I was going to ask you if there was a shadowing opportunity or something along the lines of that. Just to see like the market, I've done market research before, talking to customers, diving deeper. I mean, part of what I do is the storytelling for, the outbound piece, but the storytelling through the data is something that's so fascinating because that is what is going to hook investors, because they want to know what that story is. What does that look like? And I think that's interesting. I don't know that I know how to do it, but in terms of the research of, the market research, that is so interesting to me, and the competitive research and all of that. So I do that for a lot of clients anyway. I just didn't know how I would transition that to a due diligence offering.
Yeah. So it's something I've thought about as well. So let's take a step back and establish one thing. I do not go out and sell my due diligence services to investors because most of them either have it in-house, i.e. like a VC firm has it, usually has an analyst in-house, they have a process in-house, right? And then for the company, and then angel groups, that's their country club golf day activity. It's a funny thing to say, but a lot of semi-retired and retired people are out on the golf course. Angel investors might be on the golf course too, but one of the things they find entertaining being in an angel group. Now, only 5% of angel investors are in angel groups. Angel groups is the social aspect. And one of the social aspects, besides going to the breakfast meetings where startups pitch during screening, is getting together and doing the due diligence together and talking through each of these companies. So angel groups don't actually really look for due diligence reviewers either. So it's not something that you would want to decide, I'm going to offer this to investors. Okay. Now let's think about the flip side of the entrepreneur mindset. This is something that I'm actually thinking about a lot because, as you know, I'm working with Techstars right now. And I will tell you that as many consultants are out there helping entrepreneurs with their pitch decks and storytelling, all you hear online is story, story, story. You have to have a story. 9 times out of 10, the entrepreneur that I've talked to cannot easily answer like the give me your 1-minute elevator pitch. So this then makes me wonder, if they're not hiring like a storyteller, paying a $400 for like a group workshop to learn how to tell stories, how many of them are like gonna hire people to pressure test their business, you know?
Yeah.
Because if I've thought about it, can I create a package due diligence light? Hey, you're going into fundraising, or actually, most likely, you've been trying to fundraise for 3 months and you've been getting a whole lot of no's. What Here's this, $900 package where I will do like a due diligence light review. We'll meet for an hour. I'll give you everything I've seen. I'm really skeptical that there are enough startups out there to pay for that. What do you think?
That's interesting. So one of the things that I do in my work, when I work with startups, I say, what do you do? Okay, how would you tell that to a grandma?
Yep,
How
I
do you
do that too.
describe it? Yeah. And sometimes it's like, both my grandmas have passed, but sometimes I'm like, I don't think that they would understand that. And my grandma was like the original Uber driver, like that.
Mhm.
She had this thriving business, rideshare. There was, but my mother's mom was super business savvy, and so sometimes when they say that, it's just like, I don't know that you can distill this really simply. And for me, I need to, because one, I need to understand it because I'm pitching it to journalists. But two, you need to explain it like that, because your customers aren't going to be like, well, what's this company jargon, 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 help, jargon, jargon, money, like, so I think it's an interesting offer, because it'd be interesting to see how many startups would take you up on it and what their funding rounds look like after they have the due diligence light versus a startup that doesn't.
So, you know what, Lori, we could easily test this. I have my fundraising quiz on my website. The end page, the drip sequence could just upsell uh, a due diligence light, and you could see what happens. I can tell you that my fundraising quiz has just a drip sequence upsell to get on the phone with me, and it converts about 0.1%, which is nuts, right? I
Yes.
just gave you this checklist that I know was educational for you, and you don't want to get on the phone with me to even talk about it. So yeah, maybe I seem a little pessimistic.
Yeah.
There are like programs, right? Like, here's what I would think if I was thinking about what you do is that, let me back up. Focus on your core strength. Your core strength is that comms PR thing, or at least your outbound message is about that.
Mhm.
When we're super specific about our outbound message and we're really nichey with that outbound message, we benefit from the halo effect, which means people are like, oh, if she's really good at that, she's probably good at these other things, which means that when you start working with them, they're going to ask you to do other things, or you're going to have people come to you and say, I know this isn't your core, but like, can you do this? Right. Which it probably already happens to you,
Mhm.
happens to me. And let that knowledge of how due diligence works and let what you know about all of these things like help you support your clients. Offering like an outbound service and trying to sell that. I've had this due diligence light one pager written for years, and I just have not gone for it, because you know what happens? They think entrepreneurs that are raising money are like, that's awesome, but like, I need money. And we know that like majority of entrepreneurs that are trying to raise debt equity aren't even ready or qualified. Someone messaged me yesterday to about her startup applying for funding, and she's a nonprofit, right? And that's a huge mismatch. That's like, like if it, so it's a tough business we're in,
Yeah.
working with startup founders, and there's just like so many people out there wanting to sell like pitch deck and fundraising advice, and there's not as many people like me and you with the outcomes that we have in our specialty area.
Yeah. And I think if I were to say my core expertise, it's when you're about to raise your Series A, it's when you've closed your Series A. So you've already had your seed, you've already had your angels. Because mine is really helping with the announcement, right? Like, do you want to just put your release on Business Wire and call it a day? Or do you want to see if you can get an exclusive story in a industry publication that would go much farther? So that is my expertise, and the earlier stuff isn't. So this was super helpful.
Oh, awesome. Awesome. Yeah. So
but I know you're in the weeds in the early stage. So I knew you were the right person to come to.
Thank you. Yes, I am in the weeds. TBD going forward. Yeah, there's just like, there are so many resources out there for early stage founders. Most of them are not good, to be honest. You still have to like be a super ace entrepreneur to make it, right?
Yeah.
Just because there are so many resources out there doesn't mean that everyone knows how to get over the early hurdles of, insecurity and confidence and figuring out the building blocks and talking to people and all that stuff.
And even vetting what the right things are, right? Like there's 10 choices, 9 of them are going to be bad. You got to find the one that's.
Well, and like, that's what I do in labs is say like, who should you talk to early on for customer research? Which feedback should you actually listen to? And then which insights from that feedback should you act on in those early stages? And most accelerators, most programs, most resources aren't going to give you those 3 things. They're really not going to give you the strategic answers for those 3 things. So it still is a very like, only a certain class of people can get to that seed and Series A that, we're working with. And so when it comes to, my labs founders who have a bunch of outcomes I'm not going to measure right now, for me, that stage is like highly saturated with a lot of like free resources, even those resources aren't that good. So I'm right now been in a period of like, what's my own go to market strategy for labs? Like, which way do I go? And one place I'm looking is around like licensing the content to the accelerators that already exist versus going straight to entrepreneurs like I have been doing.
Yeah. And now you're in with Techstars. So
we'll see what happens. All right. Lori, thanks so much for doing this with me and having this conversation. If anyone is watching this on YouTube, I hope you already stuck to the end. If you have any more questions about due diligence, please put them in the comments. I'm happy to answer. Lori, where can everyone find you?
You can find me on LinkedIn as Lori Cecil Bonani. You can find me at Elsus, ELSS, like Sam, US.com.
Cool. Awesome. Thanks so much.
Thank you.